Hey guys, welcome back to the channel, best place for long-term stock investors. Today we will be doing a fresh, know-nothing research into Inari Amatron, one of the biggest, if not the biggest, quote-unquote tech stock in Malaysia. Of course, tech is down right now, so this is an area we are very excited and looking at. Before we begin, we are not financial advisors, so none of what we say should be financial advice. Please speak to an actual financial advisor if you want that sort of thing. And we also do not own shares in Inari.
So you want to build a 6 to 7 figure stock portfolio but don't know how? Afraid not. We'll be having a free training on this coming Wednesday where we'll be showing you our 3-step methods on how we identify a potential multi-bagger companies, what are the mistakes that you can avoid that you're actually currently making, and also when to actually exit your position. So all of this we'll be discussing in our free training. You can find the links in the comments and description.
All right, Jonathan, let's begin this journey.
Yep.
So what we will usually do is we like to go to their website, right?
Yep.
Again, we assume we know nothing about the company. So you can see straight away from the picture, they're related to, semiconductors, wafers, and, some precision stuff going on, right? So what's the first thing we usually do? We go to the vision and mission.
Yeah. Just to want to have a look only, what do they really do?
So this is a very basic thing, not much to really deliver good return to shareholders, stuff. Okay,
that's very generic.
Very generic. Now, so before that, right? Actually, we can even go to the company profile, see how they actually describe themselves, right? So what we like to do is we like to actually fire up an Excel sheet, right, where we can describe what the business does, roughly who they are, who is the management. So when we go to Excel, right, so we usually like to create a main, so we put this here first. Okay,
so it's like, what do they do first? So we want to paraphrase it in our own terms. Okay, so we see that based on how they describe themselves is that Inari Amatron Berhad is an investment holding company. So you write that down first, what they do.
Right. So we do this,
so the keywords that we actually find from their website is that they are, OSAT and EMS industry.
So what are OSAT, what are EMS? We obviously won't go into it very deeply here, but now these are keywords for you to look at it, right? So they have things like 14 wholly owned subsidiary. You can add all of this in, and you can actually go into the annual report, which we'll talk about later on, to see what do each of these subsidiaries do. Or if you're very hardworking, you can actually buy some of the documents of these subsidiaries, right? On SSM, right?
So I think it's only 10 or 20 ringgit only.
Correct. Oh, there you go. Actually, they even describe here. There you go. Sorry, you can see here. They describe. So Inari Technology is the provider for multinational local electronics product manufacturers, right? So so they put 2 out of the 14 that they have. So the next is we will go to their management team. So we want to see who are the directors, who are all this, and then you want to write it down, right?
Yeah, you want to have a quick background check on their management team. So you want to see whether do they really have the qualification to do what they are actually currently doing.
So the most important guy is Mr. Lau Kian Chong, you can say, the executive director, come CEO, group CEO. Of course, everybody else is also important. Please read up on them. You want to find out whether they have a shady past or they have a very good, pristine past. So then we'll write down the management or we'll write down CEO, right? This is the key guy. Right? Oops. Okay, apologies. There you go. So great. Now, what next, Jonathan?
Okay, so after we look at their management team, I think the next thing we want to see is their services. So what do they actually do? So I'm seeing a lot of technical terms already, wafer sort, whatnot. And if you open all of this, right, you can see already we open it in the next tab. So they do this wafer sort. Okay, so if you don't know what is wafer, so wafer is actually this thing, it's like a waffle kind of thing. But then, so what Inari do is that they actually cut this round, this waffle. So imagine that this waffle, and then there's a lot of die, like the one that in the middle of the waffle surface. So they actually just cut it. then you get like the chip lah, like a small little chip, which they do packaging, they do like a clinic. I think they do some sort of like a testing also. Yeah, to check whether does it function well doing tough temperature and environment, and all those technical terms which I won't go through it.
It's all here.
Yeah, right? It's all there. I think if you want to know more or understand better, just do Google and check what is wafer, what is wafer sorting, or what is wafer probing, wafer sawing, all the stuff.
So we'll look at all, and not always the case, but typically the first 2 or 3, these are the big ones, right? So we can go on to assembly. So you can again, copy and paste, and then says, okay, oops. Okay, we just go to
maybe just right
assembly lah.
Yeah.
Right, just assembly, and then
they do RF testing also. I think that's also another important thing.
So what is this for? I integrated. This is probably the big one, right?
Yeah.
Chip fabrication, RF testing. So you want to
just write the RF testing,
right? So these are the 3 big ones. There's more, of course. Look at that, and then you say, okay, what is RF testing about, right? Why is that important? How big is the market? Is there a growth opportunity? Stagnant, or is it declining? What's the end products? What is, first of all, what is RF, and then what is RF for? So you know the end product, and you get a sense, right, of what.
So what MJ is actually talking right now is all about the potential total addressable market, or what we call it as TAM.
Correct.
Yeah, and actually we did go through a little bit of a deep dive on Inari in our previous stock analysis.
Yes, you can go check it out.
So yeah, if you are interested, you can actually check the video out. I think we put the link over here at the right-hand corner. So you can just click it to know more about Inari.
Right.
Yeah. So, anyways.
So we won't go through all the services, but now we get a big, interesting sense, right? They are manufacturing somewhat. They do testing. They are also in the RF space. So now you already got the baseline for you to do research. Now, of course, the next one that we always like to look at, we use our trusty, cheaper
Ticker.
Bloomberg, right? Ticker. So. You can see the share price is down quite a bit. Now, the first thing we always like to do actually is we like to figure out what the market cap is.
Yep.
Right. So these are the key information. In addition, these are the qualitative information. So now we want to start with a little bit of quantitative, right? So we always want to know what is the market cap, right? So we can see there is 9 billion. So let's put that 9343. Then we just do this, right?
Yeah, just put the.
Okay, anyway. 943.
If you put a comma.
Yep, so if you put a comma.
Yep. Okay.
Right. Oops, sorry. We used to Google Sheets, is the other way.
Yeah.
So sometimes we like to put there in millions.
Yeah.
Right, to specify. So the first thing I tell you, right, market cap tells you basically how big the company is if you were to buy it outright. And the next one we would like to, what is this? Okay, the next one that we would like to look at would be
the cash.
The cash, right, and the debt.
Yeah.
This is very important as well. So we will go actually to the detailed financials, right? So we can go to balance sheet. Then we'll go to where is the cash? The cash.
Okay, so as MJ is searching, reason why we are looking at the cash and debt, we actually want to find out what is the enterprise value of this company. So if you don't know what is enterprise value, the formula is simple. It's basically market cap minus your cash minus your debt. And we actually do explain all of these technical terms deeply in our SIB 2.0 program. So if you're interested to find out more what is the TAM, what is a mode, or what is even the EV enterprise value, you can check out our SIB program, and the links are all in the description below and comments.
So now another thing is you want to include short-term investments as well, right, as your cash. So you can see that they're putting it.
Let's just take about
LTM.
I think we take the 2021.
Yes, let's say the 2021. So it's about 289 plus 617. Let's just round that out to 900 million.
Yeah,
that's just a brief one, right? 900 million.
Sure.
Right, make it easy. And we want the debt. So debt is a mixture of two things, right?
Yeah.
Which is long-term debt. So they have a very small amount.
I think I have to put equals though.
The plus works as well, if I'm not mistaken.
Okay.
Then they have, so there was long-term debt, and then they have no debt at all. Wow. Should I see that right? There's nothing.
Oh, short-term borrowing is 0. Oh, okay.
Ooh, so 0, right? So basically, that's it. 1 million. Okay, great. So once you get this, you are able to calculate your enterprise value, right? So you minus the cash, you plus the debt. So this is the real price in a way you are buying, right? It's not exactly 9.3 billion. It's more closer to 8.4 billion because you imagine, you get the cash.
Yeah.
Straight away. Imagine if you bought the whole company.
Yes.
So yeah, anyway, these are the key information. So what do you want to look at next?
Okay, so the next thing that I'll look at is obviously is their income statement. You want to know what is their top line, which is the sales. How have they been performing? What is the year-on-year growth of the revenue? So if we can actually plot the graph. Maybe delete the cash. Yeah. So actually, their revenue has not been really growing. It's growing.
Yep.
Recently, but if you compare it from 2011 to 2021, of course, it's an upward trajectory. But if you look at 2018 to 2021, it has been quite a sloppy kind of like growth, I'll say. Yeah. So
then
not sure what this tells us, but.
So another thing I like to look at is actually the gross margins.
Gross
margins. I really like gross margins because
the show labels so that it's easier for everyone to see.
Sorry, where?
Here.
Yes. Yes. Okay. So you can see, generally speaking, I quite like when gross margins are quite stable. But if they have to be volatile, make sure they're moving up, right? The reason is because gross margins is a sign that the management actually knows how to control their variable costs very well, typically speaking. So what does that mean? Well, it means that they are quite skilled managers. When times are good, they can take advantage. When times are bad, they know how to mitigate risk. Yeah. So that's another thing I like to look at.
I'll personally look at operating margins also, just to see how have they been able to keep their operating expenses. Are they like keeping it low?
So it's in lockstep pretty much, right?
Yeah, it has been quite okay. They've been maintaining quite well. I think that's about it for the income statement. We won't talk about their net profit because if you don't know already, some of the semiconductor companies in Malaysia actually do have this thing called the pioneer status, which they can get a lower tax rate for their business.
So one thing that I can bring up is that if you look at their EBT, right, that is their earnings before taxes. So they have no debt, so EBT is pretty much similar to operating income. So 352 million, right? So what you can do now straight away is 352, right? EBT.
Yeah.
So you can get somewhat of a PE ratio, right? Something like a PE. So you can actually do this. Yep. So it's 24 times. Right? 24 times.
Oh,
is this good? I'm sorry. 24 times, right? Is this good? Is this bad? Well, it depends. But we move on.
Yep.
So what's next? Right, we saw the balance sheet already, right? There's no debt, there's no cash.
Yeah, but let's just go through it. Let's just have a look whether is there anything interesting or not. Have they been expanding their business? Have they been buying a lot of properties? So let's have a look. Net property, plant and equipment. Oh, okay. So they have been expanding quite well.
Yeah. So you wanna actually before that we can actually write down, right? Expanding PPE.
Yeah.
Right.
So you actually want to find out what are they expanding at. So I think if you follow the latest news, right, you notice that they are actually doing a joint venture with this company in China. Yeah, they want to set up their offset plan. Okay, so so that's great. We already show you the news. So you want to read a little bit about what is this joint venture about? How is it going to help the company? How much have they actually spent to do this collaboration in China? And all these nitty-picky kind of information, you want to find it out so that you can roughly guesstimate how much they are actually going to be making or spending in the future. Yeah.
That's good. Yeah. So let's always check the cash flow statements as well, right?
Yeah.
So let's look at it.
I think there's nothing much I'll check already because their debt is so small and their cash is so big.
So you can see, right?
Yeah.
crazy amount of cash generation. So it matches with the profits, the sales, the earnings.
Actually, let's plot the net profit as well, so that we can roughly know.
Go.
Okay, so income statement, net income.
Yep, to company.
Yeah.
I just pick that.
All right.
There you go.
So you can see that their operating cash flow is more than their net income.
Correct.
Yeah,
correct.
Which is great.
So it's a good sign. Good sign.
Yep.
So we want to look at ratios next, or you want to stick in the cash flow statement?
Nothing much. Capex already kind of know already that they are spending a lot on PPE. I mean, because they are in a industry where you have to spend PPE. You have to spend on capex in order to in order to keep up with the trend. Yeah, in case you're wondering, because the complexity of, let's say, our smartphones even, I mean, it changes and it innovates. So that's why they have to always change their capex equipment.
So the only thing I would want to bring up is this issuance of common stock.
Yeah.
So you can see here, they do issue stock as a way of funding themselves. So you want to investigate, especially the big ones, right? They do have a lot of debt. But they do have this, right? So 2015, what happened? 2021, what happened?
Yeah, that's interesting, because they have a very rich in cash flow, but they are raising money from issuing common stock. So this is something that you want to find out why they are doing that. Is it because they are expanding very aggressively, or they need a huge fund? Or I don't know. I think that is for you guys to find out more if you are interested. So I think let's have a look.
And they also, they also pay dividends, right? So dividends are pretty big. So even though the fundraising is this size, but the dividends they pay out is quite a lot bigger, at least in that sense, right?
Right. Okay.
So next,
let's have a look at the ratios.
Yes, ratios. How good are they?
Okay, return on.
Right, this is a fantastic number.
Wow.
All right, even though it dropped, but after the drop, it's been very consistent.
Yeah, they've been maintaining around 20%, which you rarely actually see that kind of return on capital in a company.
Exactly. And then let's see what is next, right?
Usually I'll check what is their CCC.
Yeah, so here we go. Cash conversion cycle.
Okay.
So maybe get rid of this.
So, cash conversion cycle has been alright.
You want it to be lower.
Yeah, right? You don't want it to be lower, but I mean, they are in an industry where you have to go through a lot of processes.
Correct.
The customers also need to make sure that the products that they receive are okay of quality, reach their standard of quality. So it makes sense that their cash conversion cycle is that high. But the one thing that you want to concern is, if let's say the cash conversion cycle is growing, then it's kind of like a sign that you want to ask the management why they cannot collect cash.
So the cash conversion cycle, right? There's the formula right here. Basically, it's a mixture of these three, right?
Yes, correct.
Days sales outstanding.
And the
inventory and the payables. So we want to compare these two, usually, right? We want to compare these two, and we want to say, okay, which is bigger? Average days sales outstanding or average days payable? Now, generally speaking, you would prefer the apex or the top companies who have higher average days payable outstanding versus the average days sales. No, so what does this tell you? What this tells you is that this company, the relationship with the what do you call it? The position of power that they have with their customers is smaller.
Yes.
So that gives you an insight already. Okay. These customers, most probably international brands.
Yes.
Most likely MNCs, things like that. And of course, we know the actual name is Broadcom, right? Yes. Broadcom is their biggest client. So now that you know this information, you can actually go to Broadcom and see what they actually do, what's the growth like, what's the size and things like that.
Who is Broadcom associated to? So that's also another thing you want to know.
So this is, very important information that you need.
Yes.
So as Jonathan.
Okay. So I think that's aside from ratios. Let's have a look at their final segment, which is the segment.
Yes.
Business segment.
There we go.
So we go to business segment. Okay. So we want to know what type of services they are actually doing. So based on ticker, I think you can see that a huge chunk is actually coming from this OSAT testing and services.
Yep.
The last one.
Sorry, I think we need to here.
All good.
Yep.
Yep. So you can plot this one.
That's right.
Yeah. Okay. So he has been more or less.
They mix everything actually together.
Yeah, they mix everything.
Yeah.
Yeah. They didn't break it down for you.
Correct. But you can roughly tell, I guess, right, with this EMS.
But I'm not sure whether their prospectus they break it down or not.
Yep. And actually the best is to go to the annual report.
Yeah.
Right.
Yeah.
So the annual report, usually you can find it in Bursa, Malaysia.
Yeah.
Then you head on to the latest one, 2021. And then usually the first one, the part one, wait, is it here? Yeah.
I think I opened everything already. So there's part one. Part
Yeah,
two,
but I just want to show them that, there's part one, part two. So part one usually is the cover page. It's just vision, mission, all that.
Chairman statement, the management and whatnot.
So usually,
actually, I will personally look at the management discussion.
This is very important, right?
Yes.
This part. It tells you a lot about the company. But a lot of the juicy details are actually here, 206 pages worth of gems. So what I like to do is I go to segment.
Yeah.
Right? So
I got a feeling you need to rotate the picture though. I'm not sure. Because some of the segment is like...
so you see they say customer A, segment 1. Right? This is the customer.
So if you go up again...
Right? So Malaysia, China and Philippines. So again, geographical segment.
So Malaysia is contributing a huge chunk in
So this segment liabilities. So this one is for you nerds out there want to see more assets. There you go. So they won't even classify.
I think they classify it if you go. I think if you go up a bit. Yeah. So you see, segment 1 is.
So they don't even break down. Okay. So now this is also one thing you want to take note of, right? Like, hey, why don't they break down? Why are they not making it easy for me to read? Right?
Yeah.
It could be that there's something for them to hide, or it could be that they don't want their competitors, right, to know.
Yes.
They don't want their competitors to know. But we do get a sense of how big the customers are, right, when we look below.
Yeah. So you know that customer A, I think you need to compare this figure to their revenue.
Right.
So I think their revenue, if I'm not mistaken, they're making about 1 billion, right? If I'm not mistaken.
There you go.
Yeah, 1.4.
So it's basically everything lah.
Yeah.
So they're one customer that's very, very big.
I think that's also another. I think this also tells us that why they are actually diversifying their business a little bit to work to JV with the companies in China in a way, because they are heavily reliant on this one customer, which is what we mentioned just now, Broadcom, unfortunately. So Broadcom is the one that is controlling a lot in their business direction, the fate of the business. So that is potentially a double-edged sword, I would say. Yeah, it could be a risk also. If let's say Broadcom don't want to do business with them, then that's it for Inari.
There you go. So I think there's always more to talk about, but I think we will call it to an end. Look forward to seeing you in the next video, guys, and of course remember to like, comment, subscribe. Just let us know, right, whether you like this sort of content, and tell us, did we get anything wrong? We always welcome criticism, and if you like our stuff, just encourage us by commenting down below a lot more. And signing off, guys. See you in the next video.